Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darat. It's the Thursday morning and markets are bracing for a big impact unleashed by Trump's reciprocal tariffs. Yes, it was out overnight and the baseline 10% tariffs has been imposed on all countries, which is effective from 5th of April onwards. Donald Trump has also said that, he's being kind to all the countries by charging half of what they charge to US, and he's called them as discounted reciprocal tariffs. Trump has said that he will charge about 26% tariffs on imports on China, on India, and 34% on China. So basically, 25% tariffs are being imposed on auto and auto parts, while the previously worried pharma sector remains exempted. Now, markets across the globe has reacted quite negatively to this. We saw that the Dow futures has declined over 1,100 points, and Nikkei 225 itself from the Japanese markets has slipped by 4%. Even South Korean index has dropped by 2%. So a lot of risk-off sentiment has been prevailed across the global markets, and our own markets, the GIFT Nifty is indicating a gap down start for India too. So Trump has imposed tariffs which was much higher than the worst case scenario, and yes, we will watch out how the markets react to it. We'll also be getting some of the big market voices as usual to understand the impact of these tariffs across the sectors and what your trading strategy should be. So keep posting your stock related queries on our live feed and we'll take them up shortly. But before we move things further, let's quickly take a look at the top headlines this hour. US President Donald Trump unleashes a barrage of reciprocal tariffs to match duties put on US goods by other countries. A 10% baseline tariff on all imports to the United States will come into effect from 5th of April, and higher duties on some of the country's biggest trading partners has been imposed effective the 9th of April. The Trump administration imposes 34% additional tariffs on top of existing levies on China, while European Union has been hit by 20% and India by 26% import duties. Mexico and Canada, two of the United States' biggest trading partners, have been exempted from any new tariffs. Global markets is in the risk-off mode after Trump unveiled sweeping tariffs impacting 185 nations. US stock futures tumbled sharply with the Dow futures now down nearly 900 points. Asian markets plunge. Japan's Nikkei 225 tumbles 4%, while South Korean shares drop over 2% after Trump's tariff announcement. GIFT Nifty is indicating a 300-point lower start for our own markets. Gold prices have soared to record high levels above that $3,160 per ounce after Trump's tariff rattled markets, while oil prices fall on concerns that a global trade war may dampen demand for crude. So basically, Trump's new policies on tariffs are neither too kind nor too nice, so to say. The tariffs were higher than expected and the world has reacted to the tariff news flow. We saw that the Chinese Commerce Ministry has come out saying that they expect most of the trading partners have expressed dissatisfaction with the new tariffs. And even the Australian Prime Minister has come out saying that the Trump has acted neither as a friend nor as a foe. The hope, however, is that the tariffs can come down post-negotiations. But two major sectors that we'll need to watch out today. First is your auto sector, as 25% tariffs have been imposed on auto and auto parts. India's passenger and commercial vehicles to the US are reportedly lower, 0.13% for the passenger vehicle segment and 3% for the commercial vehicle segment. So the impact could be minuscule, but we'll watch out for some of the names like Tata Motors, since the JLR sales revenue is higher on that pact. On the other hand, India's auto component exports to the US comprise about 1/3 of the total industry exports. So some stock specific action, for instance, your Sona, BLW, Bharat Forge, all these shares will be washed out in today's trading session. On the other hand, if you look at the pharma sector, that was exempted from any tariffs. So CLSA has come out with a note saying that it is quite positive and breather for the pharma companies. So all of the shares, Aurobindo, Zydus, Dr. Reddy's, all of them will be washed out in today's trading session too. Coming to how markets stood yesterday, we saw a broad-based buying across the sectors. Mid-caps and small-cap indices outperformed the headline indices, and all the sectoral indices settled in the green too. So yes, a positive momentum which was given in the markets yesterday, but today we have the weekly expiry, so some volatility, and of course tariffs rollout which has come out, there could be some volatility which will be ensued in the markets in today's trading session. But two main cues which will be setting the tone of the trade today. We have the option cues data, which is your Nifty put call ratio, which has risen to about 0.96 levels from 0.76 levels in the previous session. Then we have the fund flows data, where FIIs have stood as net sellers. They have sold stocks which is about 1500 crore rupees in the cash markets. On the other hand, we have the DIIs which have bought stocks which is worth about 2800 crore rupees in the cash markets. So the FII DI data will be quite interesting to watch out today, and to understand how this picture stands out for the Indian markets in this new world order that we are watching out for. Now just a couple of minutes before we go to the open, but let's quickly get on board with our technical expert of the show. Joining me is Chandan Taparia of Motilal Oswal. Chandan, good morning. We have the tariffs out. What are you watching out on the levels for the Nifty front?
Good morning. Thanks for having me. So I think one uncertainty which was there from last couple of days now will go out, and market will take the shape by its own way. Earlier we were having major concern from the FI's selling, but the selling number has reduced significantly. FI's long short ratio headed to 33-35%. However, index witnessed some profit booking decline in last 6-7 trading session, but at the same time, multiple supports are now visible near its 50-day exponential moving averages. On last trading session, the index managed to recover and headed towards 23,333. There is an immediate zone, but at the same time, supports are visible near 23,000 marks. So I believe that after the negative opening, if market manages to hold 23,000, then there will be potential to bounce towards 23,333, and above that, index has potential to rally towards 23,550 marks. I believe if market manages to hold 23,000 for next 2-3 trading session, then again short-term bottom will be placed for the next leg of rally. So as of now, hold of 23,000 and surpass of 23,333 is important for any kind of bullish stance in the Indian market.
Okay. Chandan, pharma products, they were exempted from any tariffs. We saw a lot of pharma stocks did see a selling pressure, but do you expect this exemption to be quite a breather for the Nifty Pharma Index?
So like Nifty Pharma Index was comparatively witnessing some profit booking decline because of the fear of this concern. But I believe now Pharma could see some defensive as well as the momentum move. Uh, After the profit booking of last 6 trading session, some support based buying could be there. So I believe Pharma Index can see the rally of 5 to 7% from current level. If you ask me the name on the Pharma counter, I believe Lupin can see some bottom out process. Already it witnessed some recovery on the last trading session with support of 1940. So it has potential to rally to us 2150 to 2200 level. So we need to closely watch most of the pharma counter, and those name could be the buzzing during the day at the time of recovery.
Okay. Chandan, how about the auto component makers? Sona BLW, Bharat Forge, Motherson, because they derive about 18 to 30% revenue from the US markets. How do they stack up on the charts at this point of time? Because we have 25% tariffs on auto parts. So how do you see them?
So like Nifty Auto Index was slightly underperforming in last couple of weeks. And most of the auto ancillary names were consolidating in a range with the fear of this tariff. But I believe now some recovery could be there. I'll start with the Bharat Forge. The stock has been making lower top, lower bottom, but somehow support-based buying could be there at lower zone. However, it witnessed some profit booking decline in last 7 days from 1210 to 1130. But near to 1100 zone, it may provide some support. So buy on decline near support of 1100 could be seen in Bharat Force, while Motherson Sumi has support near 126. So these are the two names which might see some bottom out approach after some profit booking decline.
Okay. Chandan, now what about the Nifty IT index? It has been underperforming Nifty for the past 1 month also. Do you expect further underperformance given now that we do have the tariff uncertainty out, but still the tech spending cuts could be on the charts. So where do you see Nifty IT index going from here on?
So I believe Nifty IT could be under pressure because already it has been making lower top, lower bottom from last 6 trading session. And if I look at the monthly chart, it is trading at 10 months lowest level. So some more profit booking could be there in the Nifty IT before it gets some stability.
Okay. Any one particular sector where you're bullish on, Chandan, amidst this tariff noise that is coming out today?
I'm bullish on India and consumption theme, and I think extended weekend are there in this month. So focus on the hotels, be it Indian hotel, ITC hotel, Lemon Tree, Sele, or look at some trend fashion designing like Counter, Trend, Tata Consumer. So my entire focus will be on consumption theme of India.
All right, the focus is going to be on the consumption theme of India. But let's see the first rates which will come on the screen for you. We'll see how we are expecting a negative start for India today, given we had a tepid global handover. And yes, Sensex is down about 500 points at this point of time. Nifty is also down below that 23,200 levels. Yesterday we saw green across the board. Today we were expecting a negative start, and so has the market reacted negatively to it too. If we look at some of the sectoral indices, Nifty IT index top sectoral underperformer with about 2% cuts coming in at this point of time. Nifty auto index also with about a percent cut or so. Nifty pharma index, we'll watch out for this particular sector because this is where the majority of the winning point of the tariff noise has been. 4% uptick for Nifty pharma index. So yes, the street seems to celebrate the exemption of tariff on pharma products too. Nifty private banks 0.5% cut. Bank Nifty index seeing a cut of about 0.8% or so. India Wix, if you look at it, has spiked up right now, like about 0.5% rise we can see on India Wix front. Let's take a look at some of the mid cap and small cap indices. Mid caps with about 0.3% cut, small caps also with about a marginal cut of about 0.1%. If you look at some of the top gainers on the Nifty 50, well, yes, the pharma stocks have been rejoicing to the news. Dr. Reddy's Lab, Cipla, Apollo Hospital seeing a gain of about up to 6%. Dr. Reddy's Lab top gainer on the Nifty 50 charts with about 6% gains. On the other hand, if you look at the top losers on the Nifty 50, they include the likes of TCS, Tech Mahindra, both of them seeing a cut of about 2%. Tata Motors also reacting negatively to the news, 1% cut, given that we have an exposure of the JLR arm also. Hindalco seeing a cut of about 1%, ONGC 1% cut, Trent also seeing a cut of about 1% or so. So yes, tech stocks have taken a beaten, taken a chin onto it, and pharma stocks on the other hand, they have been rejoicing. But let's talk about a little about the bank Nifty index. Chandan, how do you see? Do you believe that banks are the safest bet amidst this tariff news that is coming out right now?
Yes, I believe Bank Nifty is holding well. Even it outperformed the last trading session and is down by only 300 points, holding the key support near 50,900 marks. 3 days back, it made low near 50,740, then witnessed some recovery. So I think 50,750 could act as a support to get some recovery towards 51,250, 51,500. So I believe some recovery or buying interest could be there in selective banks. And at the same time, I believe Nifty could also find some support-based buying. However, Nifty IT may see some underperformance, but 23,000 could act as a major support, and I believe Nifty has potential to rebound to us 23,333, and selective heavyweights name with consumption, pharma could do well in this market scenario.
All right, consumption pharma could do well in this market scenario. But let's shift focus from tariff noise to a little bit about individual stocks and focus. PNB did come out with their Q4 business update yesterday. We saw that the global business rise about 14% year on year, and even global deposits rose about 14% year on year, and global advances were up about 13.6% year on year. Chandan, the stock has been seeing a good upside past 1 month. Do you expect the Q4 business update to support the momentum going ahead?
So yes, PNB can do well, and we are positive on the selective PSU bank after a long time. PSU banks started to witness some buying interest led by leadership of the State Bank of India. The State Bank has been consolidating in a range. PNB is finding some support-based buying, holding well above its key moving averages, negated its lower top, lower bottom on the weekly and the daily chart. So with support of 95, PNB can head towards 102, 104 levels.
Okay, 102 and 104 levels that we can watch out for. Let's take another stock in focus, that is your Bharat Electronics, because the stock has been buzzing, 1% uptick we can see. The company did bag an order which is worth about 593 crore rupees from the Indian Air Force for the maintenance of Akash missile system. Chandan, yesterday the stock reacted negatively to the FY25 order miss. Today we have a new order. What is the near-term prospect tell for BEL?
So, in defense counter, we witnessed decent recovery in HAL, while BL witnessed some profit booking decline in last three trading session from 307 to 275 levels. However, some recovery seen, but again, it is likely to be in a broader range. 275 is the lower band, 300 or 305 is the upper band. So one is to play this broader range, and stock is likely to witness some volatile. Trend is not clear, but positive to range bound bias can be applied here.
Okay, all right. Let's take some viewer queries at this point of time. Well, the first query coming in from Naveen. He's asking the view on Tata Consumer Products. Naveen, Chandan, yesterday, if we look at Tata Consumer Products, the stock had reacted quite positively to the Goldman Sachs upgrade. 1200 rupees as a target price they had shared. But what are you eyeing out for Tata Consumer?
So, positive on the Tata consumer. In fact, I mentioned about this counter that positive on the consumption theme and Tata consumer can do well. If I look at the weekly chart scale, it formed the double bottom kind of process. 1070 is an important hurdle for the counter. Even yesterday, it headed to 1073. Then, after the slightly negative opening, it witnessed some recovery. So, I believe with support of 1045 or 1048, Tata consumer can head towards 1080 to 1100. So, one can look at some positive bias in the counter.
All right, positive bias in the counter can be seen. Let's move on to another viewer query. That is your Mukund Yadav is asking the views on IRCTC and Titagarh. Both of these counters have been seeing good buying interest in the past 1 month, Chandan. But do you expect this momentum to sustain going ahead?
So, looking at IRCTC first, or actually Nifty CPS index remained dull, but has been consolidating and finding some bottom out approach. And if broader market recovers, then fast recovery could be seen here. So to start with IRCTC, it formed the bottom near 700, but has been finding multiple hurdle near its 50-day exponential moving average, which comes near 735. But the way it has been consolidating, even after the market volatility, buying interest could emerge. So I think with support of 718, IRCTC can be bought for an upside target was 750 or 770 levels. Talking about TWL, Titagan Vigor, I think some buying interest could be there. So after a long time, some buying interest is visible in the Nifty CPS index, and selective railway counters can provide support-based buying interest with bargain buying in the market.
Okay, all right. Let's move on to another viewer query. Mukund is asking the view on PVR Inox. Chandan, the stock is sharply down from 1500 odd levels to right now it is trading at 960 odd levels. What is the near-term hold for the stock?
So looking at the PVR Inox, I think counter was buzzing in last couple of days, and as per the releases, the momentum could be there. But yes, in last 6-7 months, underperformance was clearly visible. It had seen a corrective move from 1750 to 875. But interesting fact is that from last 23 days, it has been holding well above 880 to 900 zone. So already the multiple bottom has formed. A small follow-up can trigger for short covering move in the counter. So with support of 935, this time PVR can bounce towards 1000 and 1035.
Okay, 1000 to 1035, that we'll watch out for PVR Inox. But let's move on to another viewer query. Shweta Naidu is asking the view on RK Forgings. Chandan, how does the stock look like? From February lows, we've seen about 20% uptick on the counter.
So RK Forging has seen a decent recovery in the last month, rallied from 600 to 862. But from last 8 days, slightly profit booking is visible with formation of lower top, lower bottom. It witnessed a corrective move from 860 to 750. And we have come to the same level where the momentum started just 9 days back. So I believe 750 could provide as a support, and negation of the negative pattern can take it towards 800 levels.
All right, 800 levels that we need to watch out. But let's move on to another viewer query. Shweta is also asking the view on CG Power. The stock in the past 2 months, Chandan, has been quite range bound. Any levels that you're eyeing out for the near term?
If I look at the CZ Power, we witnessed some recovery, but again consolidative move. So look at the range bound bias, multiple support at 600, hurdle at 650. So look at the trading bias between 600 to 650 in CZ Power.
All right, let's move on to another viewer query. That is he's asking, Amendra Kamath is asking on Ashok Leyland. Ashok Leyland, how does the stock look like on the charts, Chandan? Because from past 6 months, although the stock is not going anywhere, but any promise picture that you near term holds?
So Mahendraji, the stock has got stuck in a range. Uh, it witnessed a corrective move from 265 to 193, but has been consolidating. It failed to hold beyond 220, but same time, put writing support is visible at 200 mark. So you have to play the range between 200 to 220 as of now. If I look at the price behavior, if broader market manages to hold here, then with support of 200, we may see a recovery towards 215, 220.
All right, let's take one stock in focus. That is your Hindustan Zinc, because that company reported its fourth quarter production update. It has posted about 4% year-on-year increase in mined metal output. And this surge was fueled by higher mined metal grades, mills recovery and increased production. Chandan, given that the metal space has been doing well, how do you find the stock placed as an individual counter? And of course, what is your view on the entire metal space also? Because we also have 25% tariffs on steel imports.
So, if I first talk about the Nifty metal, comparatively it is holding well. However, some profit booking is visible from last 7-8 days. But in the last month, we witnessed a tremendous recovery. So I believe selective metal counter can do well. And before I reply on the Hindustan Zinc, let me comment on the gold and silver as well. So gold is heading to the new highs, and I believe this momentum could continue. And central banks are continuously buying gold, and because of that, any small decline could be bought. In last 5 years, gold has rallied by around 81, 82%, while in domestic terms, it rallied by 100%. Last 1 year, gold has rallied by around 21%. In last 2 months, it rallied by 15 to 16%. So gold is really glittering, and I believe 93,000 to 94,000 in INR value could be the target for this precious metal. And if I look at the silver, gold to silver ratio is at 90. Silver underperformed because of the slightly slowed down in the economic growth. But as per the price behavior and the data setup, silver should outperform. So I believe now it would be the time for silver to shine more. If it manages to hold 1,000, it can head to us. If it manages to hold 1 lakh rupees, then it can head to us 1 lakh 11,000 to 1 lakh 25,000. So these are the targets for gold and silver when we talk about the precious metal. And if gold and silver rises, I think some buying interest could be there in the Hindustan Zinc and Hindustan Copper. So talking about Hindustan Zinc, with support of 440, it can head to us 475. And I believe Hindustan Copper is also bottoming out. And with support of 220, it can head to us 245, 250 levels.
Okay, all right. Let's move on to another viewer query. That is your Ashish Prakash is asking on the view on RVNL. He's saying that he's seeing about 38% down from his buying price. He's asking whether you should hold or book his loss. Any thoughts, Chandan, on this counter?
So the good part is that broader market has bottomed out near 22,000 and witnessed some recovery. Even after the global turmoil, the market is finding support at lower zone. We have seen a scenario where FIs were continuously selling for consecutive days or months, but Indian market could manage to hold. And if I look at the selective stocks, mid cap, small cap fell sharply compared to the heavyweights. But at the time of profit decline, most of the counter has tendency to witness the more corrective move. But I believe if he has view for slightly longer term, then he can hold the counter like RVNL. But I believe that heavyweights will outperform more than the mid cap if market witnesses some recovery led by margin of safety. But looking at the RVNL, I believe with support of 242, it can head towards, with support of 342, it can head towards 380 to 400 zone.
Okay, all right. Let's move on to another viewer query. That is your Satya is asking the views on Cummins India. He's asking what is the right price to buy for the long-term horizon. Cummins recently, from the February lows, it has seen a bit of a pickup right now, Chandan. But do you expect the near term to sustain this momentum?
So, Satyaji, you need to keep in mind that if your view is long term, better to accumulate the counter in 2 or 3 tranches, because the market is not going to recover one way, but at the same time not expecting major decline. If I look at the Cummins, it has been consolidating in a range from last 10 days. It took multiple support near 2950, but at the same time 3085 is acting as a hurdle. If I look at the monthly chart setup, The counter has seen a corrective move from 4170 to 2600 levels. So already has seen a corrective move of 25-30%. And after that, it is now recovering. Long-term bias remain positive. You can accumulate the counter in 2-3 tranches in between 2900 to 3000 with the view that positionally counter can head towards 3650 to 4000 marks.
That is your Panu Anil is asking the views on Voltas and IndusInd Bank. Voltas, what is your thoughts? Let's take that first, Chandan, because from the past 2-3 days, 5-6 days, the stock is up about 7%.
So look at the Voltas. We were expecting it to move higher after the announcement of IMD, as they predicted more heat wave in the summer. And already we started to witness that as well. But Voltas couldn't perform. In last 10 days, it has seen a corrective move from 1500 to 1320 marks. It negated the high rise high lows on the weekly chart, but somehow again 1300 could provide a major support to witness a recovery towards 1450 marks. So after the recent recovery, I think the trigger of heat wave could focus the Voltas with buy on decline. So look at the support of 1300 zone for some recovery.
Okay. Just one last question before we let you go, Chandan. What are your top picks at this hour? Because we have the tariff noise which is out of the way, but any buying that you are seeing at this point of time?
Yeah, it may be last but not least. First, we need to look at the key levels. The 23,333 needs to surpass for some bullish resistance in the market, and look at the 23,000 as a major support. If you ask me, the focus sector for the day, that will be the pharma, because somehow the Trump tariff is supporting the sentiment of the pharma counter. If you ask me one name with positive price pattern, in morning I've discussed about the Lupin, and now I would like to discuss about the Torrent Pharma. So to reply on Lupin, we were expecting a rally towards 2200 levels, but in the fresh recommendation, I'll go with the Torrent Pharma. If I look at the price behavior, stock is forming the inverse head and shoulder pattern, which has a bullish implication. A small follow-up about 3300 can take the stock to higher levels. So with support of 30 to 30, we can see an upside target towards 3450 in Torrent Pharma. Apart from that, I believe again consumption theme could focus, and Titan is bottomed out. Yesterday we have seen a recovery from 2970 to 3100 level. On daily chart, we are witnessing earlier sign of bullish divergence. As gold is recovering, this stock has not performed. I believe positive bias could be seen. So with support of 3050, Titan can head towards 3200 marks. So selective pharma and consumption and gold related theme could do well. And third name, you can focus on the Indian hotel, buy on decline with support of 800 zone.
All right. Some of the consumption and gold names that you have mentioned, we'll keep a watch out on that. But with that, we have to let you go, Chandan. Thank you so much for your time and answering our viewer queries.
Thank you.
All right, let's take a quick check of the markets before we move on to our next big market voice. Sensex has, trimmed majority of its losses at this point of time, but it's still down about 400 points. Nifty is also below that 23,250 mark, 23,230. That is where we stand at this point of time. But yes, pharma stocks, they have taken it to the cheer, and Nifty Pharma Index is up about 4.7%. It is the sectoral outperformer at this point of time. Rest, majority of the sectoral indices are deep in the red, and Nifty IT index definitely is one of the sectoral underperformer at this point of time. But without much further ado, let's move on to our next guest of the show. We have Mark Matthews, Head of Research Asia, Julius Baer, joining us. Mark, good morning. With President Trump enforcing a discounted 26% tariff strategy against India, what are the implications for trade and market sentiment?
They are negative because this is essentially twice what Wall Street was expecting in terms of the average tariff on the rest of the world. And where we go from here, I think, depends on two things. The first is the reaction of other countries to what the United States has done. Because what the Secretary of the Treasury, Scott Bessent, said yesterday, I think, is quite important. He said this is the maximum rate. This is not going to go any higher. And the inference in that was that it will go lower. And And so if countries choose to reciprocate, in other words, increase their tariffs on the United States or some other punitive measures, then I think that's very negative. But if countries choose to take this in stride and sit down at the table with the United States and negotiate, then I think there's only good news from here. In other words, the tariffs can come down. And it really depends in each country if politicians will be able to do that, because in some countries, the populace might not let them. The populace might be so angry that they say, oh, we must impose some kind of punitive measures on the Americans to punish them for what they've done to us. But I think in most countries, the populace won't be like that, and politicians, governments will be allowed to sit down and negotiate with the United States. So the good news is there's a lot of room for these tariffs to come down. But then the second thing is, how quickly can those negotiations start between the affected countries and the United States? Because the longer the rates do stay very high, the more people start to worry about the impact on the economy and a potential recession. So, yeah, that's what I think.
Okay, Mark, very interesting that, now that the bargaining is what we need to watch out for among the politicians too. But how do you view these tariff changes change the competitive position for India compared to China or even Vietnam and Bangladesh, because they have much harsher tariffs imposed on them?
Yes, well, it seems like the numbers were devised based on how big the trade deficits are between each country and the United States. So the deficit in the case of Vietnam, for example, that the US had with Vietnam was extremely wide. And so that seems to explain why they did that. Also, to prevent any countries from just moving to another country and starting to export from another country as an intermediary. I think it looks like this is the reason why they've chosen to use the existing trade deficits as their starting point. So India doesn't have a particularly wide trade surplus with the United States, and so I don't think India looks that bad relative to, as you said, to China or Vietnam or Sri Lanka. They all had much higher tariffs.
Okay. So what does this mean from the capital flows perspective? Because we have 26% tariffs on India versus 34% plus the 20% imposed on China too.
Well, I don't think that exports are the big driver of the Indian economy. And so as much as it's a negative, there are other things happening in the economy in India that we can look forward to, like interest rate cuts from the Reserve Bank, like an acceleration in bank lending and government spending. And so I still think that the positives outweigh the negatives for India over the next 12 months. If exports were a very big part of India's GDP, then I wouldn't say that, but happens to be one of the countries in the world where trade is not the real driver of the economy. It's the domestic spending, domestic government spending, and domestic consumer spending.
Okay, Mark, but he had highlighted plenty of sectoral tariffs also. Pharma has been exempted. Auto was imposed with about 25% tariffs. Any other sectors where you view that the bear of the brunt of the tariffs would be minimal, and where do you see India to be, on a positive side?
Well, yes, there were exemptions, as you say, but I hesitate to make any forecast because I think this is an extremely fluid situation. The fact that Trump started very high indicates to me that a lot of these rates will come down, but we don't know which ones or when. So one thing I would say is I don't think we should look at these numbers today as static. I think they'll be very different in the second half of this year. But which ones will come down, it really depends on a lot of things that are difficult to forecast.
Okay, okay. But Mark, the corporate India was banking on FY26 for earnings recovery. Now, with this tariff rollout, what is the earnings growth that you expect from the corporate India for FY26?
I don't put together the earnings growth forecast, but I doubt that it'll come down that much because once again, I don't think a lot of the aggregate earnings growth we were forecasting for the Indian stock market was coming from the export of goods to the United States. So off the top of my head, I would say there's a minimal impact. And if this does result in a slowdown in the U.S. economy and interest rates being cut in the United States, then that would give even more leeway to the Reserve Bank to cut interest rates, which would be a positive for the domestic economy in India. So I don't have a number for you, but I think it'll be negligible.
Okay, all right. Mark, but what about the Indian IT sector? Because that is already under the pressure. Do you believe that this fresh round of tariffs could trigger more downgrades, making the sector a risky bet?
Well, it's a service sector, and services are not impacted by these tariffs, so I don't think so.
Okay, all right, all right. Mark, what about the reciprocal tariffs, which was lower on India versus key competitors like Vietnam and Bangladesh? Do you see a positive sign here too in terms of apparel or as well as footwear sectors?
On the surface, yes, but who knows what these numbers will be at the end of the year. So it really depends on each country to sit down at the table with the United States and hammer out a deal. But yeah, on the surface, it would be positive for apparel manufacturers in India. Are they really going to be that important for the overall economy, which is $3 trillion in size? I kind of doubt it. I mean, for a very small economy like Bangladesh, it's meaningful. India's economy is vast. I really don't see how making more T-shirts is going to have a big impact on it.
Okay. Okay, just one last question before we let you go, Mark. What about, we have the dollar index. It's near around your 103 to 104 levels right now. But with this tariff rollout, what are you expecting from the currency perspective and, of course, on the rupee front too?
Well, to the extent that this creates a lot of uncertainty about the American economy, one would expect interest rates to come down in the US. And I noticed the 10-year Treasury yield in the US is back at 4%, which would infer that people are expecting more rate cuts there. On the other hand, in a truly risk-off scenario globally, the dollar somehow always is a currency that benefits from those sorts of events. And this time it's looking like it will be too, which seems a bit upside down because the problem originates from the United States. But in a big risk-off event, I imagine that the dollar would be strong versus most other currencies.
Okay, all right, Mark. Does this mean that the risk-off sentiment from the equities and, of course, with dollar, you're saying that it could rise from here on? Does this mean that gold is the best place to reside on for investors?
Well, in a truly risk-off event, really, cash is the only thing that outperforms. If you think back to 2008, the global financial crisis, gold went down. So gold has gone up a lot. I don't know if it will keep going up. My sense is it's due for a correction, actually, and I wouldn't really be expecting it to continue to go up as much as it has. I'll put it that way.
Okay, all right. All right, with that, we have to let you go, Mark, but thank you so much for your time and we hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets at this time. Sensex is down about 300 points. It's off its day's low. Nifty is also above that 23,250 mark. It's still below that 23,300 mark, but still quite a negative sentiment observed across the markets. Mid-cap and small-cap indices contributing to losses, but however, small caps at this point of time is outperforming, 0.3% gains that is coming in from the small cap index. On the other hand, if we look at Nifty Auto Index with about a percent cut, Nifty IT Index again one of the sole sectoral underperformer at this time, and Nifty Pharma Index has been outperforming the market on a broader range. Other than that, we can see Nifty Realty Index blinking in the green, and the Nifty Bank Index was also it is back in the green but flat in the green at this point of time. Consumer durables also with about 0.2% gains. So yes, we'll watch out for any recovery in the markets that will happen today. But with that, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for Closing Bell, when we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.